Executive consultants. We are back for our last video, part 3 of this video. So if you've not watched part 1 and part 2, please I advise you to watch part 1 and part 2 so that you can be up to date when you're watching part 3. So we stopped when we had finished the operating activities, which takes a lot of time when you're working out. And the next parts, that is the financing and the investing, really takes a short time. But let's see what it is, what it involves. So we'll come back to our question, back here to our answer sheet, and then we'll be now going to our investing activities. So cash flows from investing activities. So we need to know what we have under that. We have already know that we sold 30 millions and then we also sold 225,000. So let us first put that very fast before even we forget. So we disposed of a non-current asset at 30 millions, and then we sold an investment at 225,000. Okay, then we had acquisition of a non-current asset. So how do we get to know that you have acquired? How do you arrive at that? So when we come back to our question here, we are seeing that our current assets, non-current assets are increasing by almost 250 to 200,000. But is it the case? Let us dig into using our non-current assets account to see how much. So like we've been doing, we are going to get a closing figure and then we'll simply come back. Our closing figure is 975. So we'll come and then put 975. And then we'll add the depreciation for the asset, which you already know by now. And then if we had any revaluation, we would less it. And if we had any devaluation of the asset, then we would probably add it. But because we don't, we would put a 0. And then we would less the closing. So the closing, we come here and then we see our closing. Back to our question, our closing was 750. So we simply come back and we put 750. So that was our closing, so that we get to know how much cash moved out of the business. So we put some, but before we do that, we need to put a negative. Okay. Then we'll be able to come and say sum. And once that is done, then we'll simply scroll. Then we have that. Okay. So we need to check out and see if that is how much really we used by simply putting commas, that we get to know. All right. So we had this, and then we also went ahead. All right. Would just a little corrections, because we want to know how much we spent or how much cash we purchased, because we need to work, we are working backwards. The beauty with the statement of cash flows is working backwards. So remember, we sold an asset. So we sold an asset which was costing 37,500. So that is how much it costed. And then we end up finding our figure as cash, that was all the purchases that we made, as 262. So we will come and then we come to acquisition of an asset, and then we say there was an outflow of this amount. So we would come and then we put a negative, and then we say there was an outflow of that amount, so that we can be able to arrive at our net investing income. Okay, and that is what we have as our net investing incomes. So we'll come and then simply put it in red for easy identification. And then we'll move to the very last bit of our working, which is cash flow from financing activities. So here it has, like we talked about, it has issue of shares, debentures, and all that. But we are simply going to pick out only those that are applicable to this question. So like we paid dividends, so we had an outflow. So we come back our question, and then we'll simply look at the dividends that were paid, proposed, and they were paid, which was 225. Remember, they said no dividend was paid for the year. So we can't say they paid dividend of 195. They proposed this and it was later on paid when it was due. So 225 was the dividend was paid. So 225. And then we will have our final one on the issuing of shares. Now, when it comes to shares, let me make up something small here. Issues of shares. So in our question, we have 100 per share and we have 750. So that is the value of the shares. So we need to find out the number of shares and then the number of shares that were issued out. So we are going to come and simply say the 750, just a moment, 750 shares, because I'm simply taking up everything. Okay, they're supposed to be actually 750. I don't know why I'm calling it. What? 750. So I would simply come and I add a 0 here. So we divide this because we need to know how many shares were issued. So we divide it by 100 because every share was costing 100. And then, okay, what is where we found that typical in the, we need to be certain. Okay, let's just use the divide. Okay, found what, just a moment, because all right. So we'll simply come. So they have corrected us our working hard an issue, and now we have 7.4 shares, 7.5 shares. But remember, they later on said that these shares were issued that one person, when you apply for one share, you get 2. So it would simply say 7, would simply say this divide by 2. And once that is gotten, then we come back to our question. They told us that they sold them at 120 per share. So we are simply going to come and then multiply this by 2. So we are simply going to say equals to 120 multiplied by this. And then we'll get 450 millions from our issuing of shares. So we'll come and then we put it as a cash inflow. So we'll put it as a cash inflow. And then probably we don't have any of this. So we'll say net cash flows, and then we'll simply say sum. We put the sum and then we will add this. Then we'll have this as our net from our net carrying. So the next thing that we need to find out is either we have a decrease or an increase in our cash and cash equivalents. And how do we do that? We simply get the totals for the nets. So we're simply going to get the totals and we add them up together. Then whatever it will get, we'll be able to tell us. So it's a sum, and then we have to come back. Let me just open the brackets. Then we need to come back and capture the net. We capture the net, then we also capture this, and then we capture this, and then we put enter. So when we do that, you can clearly see that we have a decrease in cash and cash equivalents of 240. When you have this 240, when you add back this one that we started with of 150, let me just put them also in commas. When you add it back, you're getting the difference of 90, which we started with up here. And simply this means that we have worked out together a number and it is all well. So we can simply go ahead to put these in red to assume or to take them as correct. For we have fully done a number together. So the key things that you need to pay attention to are here. You can use this so that you don't need to go on with the ledgers, because ledgers tend to confuse students, but this will help you to understand. You don't need to use a ledger. You simply need to know how the flow goes, and that is all. And you will always find that these are the most common accounts: disposal account, committed depreciation, non-current asset account, and then the profit before interest and tax. And then, of course, when it comes to issuing of shares, the other important thing that you need to pay attention to is you need to know which non-cash item is going to be added back and which non-cash item is going to be less. Now, that one, if you fail to understand, you can take it in this way, that the non-cash items that you added back in the income statement are going to be less. That's why you would add the profit on the sale of the asset in the income statement, but here we are lessing it. And then you would less the depreciation, but here we are adding it. So that is another way for you to master this. And like we have seen, we've gone step by step doing the number. Executive consultant is here for you and I to learn together. So don't fail to reach out to us when you feel you need help. Please so comment in our comment section with the standards that you would want us to work on, and then we'll straight away give you that. Executive consultants, see you again as we keep on learning together.